big one, because we get this a lot. And we're here with the expert lender from Contour Mortgage with the contour face, whatever that means.
People gonna think I have some makeup on, a little contour.
I'm saying, y'all, I don't know. Anyway, so now question for you. When a lot of times I'm out there with our clients, we're putting in offers, and then we just had this with our clients who close in Rockland. Like we started with FHA loans, right?
Okay.
And then we were getting, the agents were telling me, hey, we got to switch over to conventional if you want to have a shot, right? Because a lot of the sellers are not accepting FHA loans, and legally they don't have to. But what can you tell us, or what can you tell sellers about FHA loans? Because I feel like there's three big concerns they usually have. They're concerned about the appraisal process and this heightened scrutiny the property is going to get. They're concerned about a lower down payment. They're concerned that it's going to take longer to close, and then there may be other miscellaneous beliefs out there. Because I've heard horror stories that I know can't be true, because that's not how the program works.
Listen, it's a question that, well, it's something that is very important in our industry, man. So many people that can buy a home that are well qualified get rejected by the sellers because the FHA program. They see FHA program, they have no idea the backing behind it, how competent the loan officer who did it.
Yeah. They
just automatically see FHA. I don't want it. They rather take this guy comes out of nowhere, 200,000 down, bam. Oh, I want that guy. Because they're putting 20% down. Yeah. Most of our FHA buyers are first-time home buyers. Most of you don't have to be first-time home buyer, but most people are that use the FHA program, and they put 3.5% down. They take advantage.
Yeah.
Listen, if you get in a $1 million home for 3.5% down,
$35,000.
You should do that every single time. You know what I mean? Not every single. Obviously, it depends, but that's a pretty good way of getting in there. And there's one thing that you should know: an FHA buyer and a conventional buyer, they could have the very same qualifications.
Okay.
It's all about, why are they getting on the FHA program? Like I said, the reason why they might be getting the FHA program is because they want to put minimum down, right? But it doesn't mean, just because somebody's putting 20% down conventional doesn't make them automatically a stronger buyer than FHA person. Okay. Absolutely not. Because this guy, the 200% down, the 20% down, the 20% down, putting $200,000 on the property, maybe more than 20%. He might be self-employed and his taxes not up to date.
Okay.
The lender didn't do a good job looking at his taxes. This deal is gonna fall just as quickly as an FHA buyer who's not well qualified.
Gotcha.
You know what I mean? Just because a person's putting 20% down doesn't mean anything regarding that is this person more qualified than the other.
Gotcha.
You're just looking at numbers here. This person 3.5% down could be making $300,000 a year, and like I said, he has a better place to put his money, a better investment. He feels like he can make 70% up on Tesla, instead of putting that money on his own. So that's one thing that I wanted to get rid of the way. Just because a person is 20% down and one person is 3.5% down, don't just discriminate just because of that. That doesn't mean anything.
If I'm a seller and I have these offers coming in, and I got the 20% and I got the 3.5%, and sometimes the 20% are also FHA buyers, right? They might have an FHA loan and put down 20%. It might not just be a conventional. But let's say it's a conventional 20%, FHA 3.5%. Who do I need to speak to, or who should my agent speak to get more information? What should we be looking for?
See, I guess you have to filter people out somehow. So I guess that's where it all comes like full circle on why agents do what they do. They feel like if you have a higher down payment, you have a more qualified buyer. You have to filter somehow. I understand, but how do you filter out without that? Let's say finding alternative methods to filtering out those deals.
Well, listen, as an agent, I want to make sure that my client is getting the best.
Exactly, I understand perfectly. I get that.
I'm not filtering out anything. I can give it all to the seller, but I want to make sure they might ask me questions about the offer. So what should we?
You want to make it
to make sure that we're making informed decisions.
The best thing out of always call the loan officer representing that pre-approval, representing that buyer.
Gotcha.
Obviously, that's number one.
Okay.
Ask him, have you even spoken to this guy? When's the last time you spoke to the buyer? If it's been 3 months since they last spoke, since that pre-approval, a lot of things, especially in this market nowadays, things change rapidly. In a week, they change.
Okay.
3 weeks I was sweating on locking rates.
Okay.
I was literally sweating. It was very difficult, very uncomfortable because the rates were out of control.
Yeah.
Last 2 weeks they've been better. You
Yeah.
know, they've been stable. So now I can breathe a little bit. I can give better decisions to my client.
Yeah.
You know, so that's the first thing. Call your loan officer. Find out when's the last time they spoke to them. You know, try to get a little reading from the loan officer if he sounds like he knows what he's talking about. If he knows about the property, just press him on the details of your property that you're selling, of your seller, the timeline, and see if they can if it meets the timeline, if it meets the requirements that the buyer and the seller have to talk about. For example, if you're saying this property has this and that, peeling paint, cracked sidewalks, cracked stairs, you tell your loan officer this has that. Is your client aware of that? And FHA will have a problem with those type of things.
Yeah.
If there's one thing against FHA is they're more strict on the condition of the house, right? It has to be in a better condition than, let's say, a conventional can overlook some things.
Okay, gotcha.
For sure. So these are things that you want to make sure that your client, that the buyer knows, that the loan officer knows, because he might have to pivot from one program to the other. You know what I mean?
Gotcha. So it's not necessarily, I see FHA, they're not as good. It could be, I'm really looking across a few different axes, right? I gotta think about the property itself. Like if I know my property's golden in great condition, we explain to the loan officer, hey, here's everything that's going on. And they said, so everything you told me sounds good. We can send them photos, videos, looks good.
Right.
We can avoid issues that way. So one, we want to make sure we're checking about the property, right? Two, the buyers themselves, we got to really kind of dig into their profiles and not just accept the one piece of paper that we have as like the gospel, and we don't know for sure, right? Now I know at Conto you do the secure buy, right?
Yeah, so secure buy is a good way for a seller to feel more comfortable. Okay. It's how we help a seller feel more comfortable accepting an offer.
Okay, explain that to us, because you can do that. Yeah.
So yeah, it's basically we take our buyers. Okay. You come to me with a buyer, a borrower comes to me, and we put them, not just a pre-approval. We take all the documentation and actually run it through the whole system.
Through the underwriting system.
Through the underwriting system, and they get an underwritten approval.
Okay.
That means that the 3 pieces of paper, the contract, the title, and the appraiser, the borrower is completely approved.
Yeah.
We check his assets, we check his income, we check his credit.
Yeah.
All we're missing is the property.
Okay.
The report card of the property, the title, the appraisal,
Gotcha.
And the contract. That's what we need. And if all those 3 are good, which you as a seller should know already, they're the selling agent is what I mean.
The selling agent. Okay.
The listing agent.
You're talking about the seller. Like, my seller alone, man.
You'll be surprised. No, the seller hires you for a purpose.
Yes.
And one of those purposes is to assess the house, the value and the condition of it.
And they tell us they want $50,000 more. Go ahead. You know that's true.
That's 100% true. I've seen your videos. I see you got to do the best job you can out trying. You got to stop dreaming. I understand that everybody's getting. If you bought a home in the '70s, you about to get a good payday, and they want to get the biggest payday they can possibly have. We understand that. Listen, your listing agent is helping you. Is in their benefit to sell the home as much money as possible.
If I can sell your home for $100 million, baby, believe I do.
Listen, we're done that day. I'm retiring to DO.
I'm gone.
So sellers, the listing agents most of the time want to sell their house for the highest price possible or the best price possible, and sometimes it's unreasonable to ask them to do something. You should know the state of your
Right.
Oh yeah, exactly. So and that comes with the presentation.
Now I've heard. What I'm hearing so far is for these big concerns we have for the appraisal, for the condition of the property, communicate with the if need be, right? Communicate early with the buyer's agent or the buyer and the loan officer,
right?
So you can kind of troubleshoot those issues ahead of time before an appraisal comes in. Sometimes the buyers will agree to take care of them themselves, like before an appraisal comes. I've had that happen in a few instances, right? When it comes to the buyer profile, we can dig a little bit beyond the pre-approval if they have something like that secure buy program that's giving you more confidence as a seller.
Absolutely.
That buyer's really just 3 boxes we gotta check off. As long as we're good on those 3, we know this thing. We know they're good to go. As long as nothing changes in their situation, which is true of any other buyer,
right?
We're going to be able to close. And a down payment, it sounds like, hey, if we're checking that, if we're doing like a secure buy, we can get that down payment. We know they're qualified, because I guess as a seller, my thinking would be I want a higher down payment, gives me maybe some more confidence, a person's motivated to close. But I would look at it like this: if someone's putting down 200 and then got 1 million, like 200,000, they got 1 million in the bank, versus someone who's putting down like 50,000, but they only got 100,000 in the bank. That 50,000 person is probably a little more motivated than that 200,000.
Right.
I'm just like,
that's a good one, Justin.
I need my 50% to work.
Absolutely.
Like I need this out.
Wow, yeah, I never thought about that one. Yeah, so, they're using most of their worth, their net worth, their money, their funding, their savings, their life savings
to get this house.
To get this house. So they don't want to risk it.
They want to buy the house. Maybe even more than you want to sell, right? So I mean,
that's a good point, man.
They can be really committed. So I always say, always evaluate the offers. Don't just go off the name you see on the letter, FHA conventional, because it's got to dig a little bit deeper.
Dig a little deeper.
Now,
to the seller, at the end of the day, when you accept an offer,
yeah,
let's go past to the closing,
yeah,
to the very end. It doesn't matter how much money they put for you. For the seller, I'm the seller right now.
How much the buyer puts down versus how much is going to be financed.
At the end of the day, the check that you're going to get is going to be the check that you put for the price of the home.
Yeah.
The buyer is going to come with his portion, whether he put 3.5% or he put 50%, and the bank is going to come with a second check.
Yeah.
And sometimes maybe it'll be two different checks, one from the bank, from the buyer's bank, and one from the loan officer's bank.
Yeah.
So two checks. And that combines for the purchase price of the home.
Yeah.
So it doesn't matter if the person put 40% down or 3.5% down. It's going to be his check, the buyer's check.
Yeah.
And then the bank is going to give the rest, the loan amount. Is going to cover the rest. So at the end of the day, you're going to get one check.
Yes, because it was a story that if they're putting less down and you're getting more from the bank at closing, then you would be paying more in taxes.
They somehow believe
the same amount of money you're getting regardless. So if there's any tax bill at all, it's going to be the same whether the buyer gave you 10%, gave you 3%, gave you 50%, and the bank filled in the rest.
Somehow, I think this person that I was talking to believed that somehow the more money the buyer gives you, let's say they give you 20,000, you could kind of almost do like, okay, 200,000, it's just a bank check. No, this is my friend that gave me that. They only gave me 343. I think that's the rationale that this person was.
But it's gonna be in the contract. There's a contract.
At the end of the day,
it's gonna be in there.
It's gonna it's gonna say you're getting 900,000, you're getting 650, whatever the price of the home may be.
So they're gonna know. So you can't put the money under the table, y'all. You can try. You can't put the money under the table, y'all.
No, exactly.
So then,
the only way, and I don't know, Justin. Now you teach me about this. Cash. When you're buying cash, there's no bank anymore, right? When you're purchasing a house cash, but it still gets represented somehow to the city that you sold that house at a certain price, or right? Yeah. Still,
attorney, contract. Yeah.
There's still a contract out there that shows the sale price. Yeah. So it doesn't matter. Even if it's cash, you can't just, here's